Hey everybody, Bull to the Bust. It is Monday, June 15th. Welcome. Thank you for joining me, friends, YouTube family. I'm going to do an update today on the markets, and we're going to look at the economic recovery. I've got quotations up, economic recovery. Is it fact? Is it fiction? Well, we're going to look at several charts on that's going to tell you the story, and I want you to keep an open mind as we talk about this recovery, quote unquote. Let's get started. I'm going to start off right here out of the CNBC article. Now, in a service sector economy, consumers consuming things, or consumers eating out at restaurants, people traveling, swiping their credit cards, even though technically that should not be the sign of a strong economy, that's what you have to look at in a service sector economy. People aren't really producing anything. We lost many manufacturing jobs over the decades. So keep an open mind. The charts we're going to look at have to do with consumption, people traveling, spending, swiping their credit cards, and so forth. Not really an economic recovery, but you can make the argument that we're getting back to the old economy when you look at these charts. Right here, Apple Maps shows an increase now for directions. So more people are traveling, less people are on lockdown, more people buying gasoline, booking hotels, which we'll talk about here in a minute, eating out at restaurants, going places in general. Okay, so theoretically, it helps the economy. The money velocity increases, and it may give the appearance of prosperity when in actuality it's just a bunch of people driving around in their vehicles, going to ball games, amusement parks, and so forth. Well, I don't know if the ball games have resumed yet, but you get the point. So increase in traveling according to Apple Maps. Of course, we see mid-March when it really dropped off, and it divides it up here into transit, walking, and driving. So as you can see, we are seeing a recovery getting close to where we were back before the shutdown. Next chart here is U.S. restaurant bookings, and this is according to OpenTable, a restaurant reservation app. And we see, of course, mid-March again, the big drop down, the huge decline, and they're using early March as the starting point. And now we did see a slight recovery, recovered from about 100% drop, now down to about a 70% drop. So a 30% recovery in restaurant bookings. And again, this is a very pitiful recovery because even the economy before the shutdown was pretty pitiful. Service sector economy. So a bunch of people sitting down at tables eating food, that's going to be our gauge of economic strength. Pretty sad, but nonetheless, the charts do tell the story of the recovery of the pitiful economy. Next up here, hotel occupancy rate. We do see again mid-March drop off. It was about a 40% drop. Now we've seen a recovery of about 20% of that. Next up, air travel. We know that the airlines got decimated. The last place people wanted to be during a pandemic was on a plane with a bunch of other people, elbow to elbow. So we didn't see as big of a recovery. But after a drop of about 95% now, we've retraced maybe about 15%. So still way below where we were at the start. So also air travel slowly beginning to recover. Now what we should ask ourselves is, would we see these recoveries, if you want to call them recoveries, would we even see this improvement in these areas, these travel categories, if it were not for the intervention, the stimulus, the extra $600 a week payouts for unemployment, bailouts of all the banks, the corporations, the institutions, including backdoor bailouts that you or I are not allowed to know about, even though theoretically our tax money goes towards that. It's a big secret. But would any of this recovery be possible if it were not for the intervention and the stimulus? And it's interesting. I wonder how many $1,200 stimulus checks are being spent on restaurants and travel and other unnecessary entertainment items. Well, we're likely to find out very quickly what the economy is going to look like once some of the stimulus gets pulled back. Now, Larry Kudlow's out there saying that the $600 additional unemployment checks will end in July. And we've talked about it here, and he admitted it. He said, quote, almost all businesses understand that the $600 additional benefit is a disincentive. So if you didn't see those reports, what was happening is a lot of people were making more money on unemployment because of the extra $600 a week, making more money sitting at home getting unemployment versus accepting the job once their employer called them back to work. So companies were reopening, calling workers back, and even though they were not working, these employees were saying, no thank you, I don't want to come back. Can't really blame them. Money talks, so it was a disincentive for people to go back to work. I mean, come on, think about it. Who wants to go back to their job, wear a face mask, and deal with possibly angry customers and edgy customers, and maybe even sick customers? Who wants to go do that when you can get $600 extra a week for staying at home? Right? Absolutely ridiculous, but that is what the checks did. They disincentivized people from going back to work. Now, will they extend it past July? As of recently, they're saying it's going to end in July. Can the economy continue to recover without these additional $600 checks? Right? That's another thing. In addition to the $1,200 stimulus, I wonder how many people were spending their extra $600 in unemployment, traveling, going to restaurants, and basically wasting it on non-essential purchases. All right. Nonetheless, though, Kudlow, that's his job, to go out there and be positive, to just tell you what's going to make you feel good or what's going to put confidence into the people. Of course, I think most of you here on this channel, you know the true story. There's not going to be a V-shaped recovery, maybe in the stock market, because that's easily manipulated upwards, but we'll likely never get back to the economy that was before the shutdown. And if we do, it's going to take massive, continuous intervention by the central bank. Hill article right here. Kudlow, U.S. economy off to the races for V-shaped recovery. Ha ha ha. Next up, Anchorage Daily News. The Trump administration won't say who got the $511 billion tax-backed loans. Right, that's why I told you it's a big secret. So on one hand, they say, well, it's the taxpayers that are going to be on the hook for this, even though technically we can never raise taxes enough to pay for all the spending, so it's impossible. So when you hear that the taxpayers are going to be on the hook, it's not true. It's just something to make you feel like we're the ones, us taxpayers are the ones that have to pay for all this. Right? We're not the one with the printing presses, so why people still believe that, I do not know. And if we actually were the ones that had to pay for this at some point, and I'm sure they will try to make us pay for it, they'll probably raise the taxes, but if we really were the ones, wouldn't we be the first ones to know who is getting this money? There's been this history of non-transparency, even though the current administration, they're trying to tell us that they are the most transparent. But I think most of you know by now, whatever they say, think just the opposite. V-shaped recovery, no recovery. They're going to be transparent. They're going to be more secretive than ever. The economy is the best it's ever been. The economy is actually the worst it's ever been, and is requiring more Fed intervention than ever at any point in the history of the United States. And let's wrap it up with this right here. Even the insiders know it is a bunch of BS that the economy was strong and that it's going to recover. Mick Mulvaney, insider here in the Trump administration, dumped over $500,000 in stocks the same day Trump reassured the public that the U.S. economy was doing fantastically. And this is an article out of the Business Insider. It was initially reported by the Daily Beast. Mulvaney unloaded between $200,000 and $550,000 worth of stock in early March. This was before the big shutdowns began, but the word of the virus being spread was out there at that time. So I'm wondering what Mulvaney knew. Isn't it interesting, again, that the insiders always seem to be great stock traders, and they always sell their stock just in time, just before the downturns. So, ladies and gentlemen, the swamp is bigger than ever, and it seems to be growing by the day. I wish I didn't have to say that, but that's what it looks like to me. Let me know what you think down in comments. Let's talk about stocks real quick. S&P, NASDAQ, and Dow Jones all up in the green today, anywhere from 0.5% to 1.4% in the green. And the reason that they're telling us is because the Fed is now going to be buying individual corporate bonds. That comes on the tail of the Fed jumping in and buying ETFs. Remember, they cannot let the stock market collapse, so that's why you saw such a big recovery even during times of turmoil socially with the protests and with the COVID shutdown. They cannot let the stock market collapse. It is the one thing that's holding this entire system together, and it's the one thing that's actually keeping some confidence up. When people see their 401ks going back up, that's going to help the confidence Pension funds are also heavily dependent on the stock market. Also, companies are more likely to hire and rehire people they laid off when the stock market is rising. So yes, there's going to be some red days, some down days, but expect the stock market to be propped up all the way through the end of the year. After the end of the year, is there going to be much of an incentive, or I should say after November, is there going to be much of an incentive to keep it propped up? What's going to happen if they let it collapse? You tell me. I think you know my take on it. I think time is running out and we all need to prepare for some very bad events, not just economically, but socially. It's my estimate that we're going to see other events this year that are going to shock the world, even probably worse or even bigger than what we've seen so far. So I think we better prepare. Safety is number one. Security is number one. Now, some people might say this is prepper talk. Well, prepper is just a word for preparation. You need to prepare for the events that are going to be unfolding. Thanks everybody for watching. Let me know down in the comments what you think. Hope to see you there. Bye for now.